Welcome to the stream. My name's Keith Allen. I'm a full-time trader. I'm a work-from-home dad, and I am co-founder of Material Indicators. And today we're going to climb deep into the charts. We're going to look at order book liquidity and of course, order flow and fire charts. And we're going to look at the candle charts. And we're going to look also, of course, at some technical analysis and try and get a sense of what's happening here. So I want to share a screen. All right, starting here, obviously a look at fire charts. We've got some liquidity. You can see that we do have about a $25 million bid wall at 58K, holding things up for the moment. This is, I think, what is maybe holding us up from a further breakdown. You can see here, I want you to notice something. See this green line? This is our bin CVD. And that green order class, $1,000 to $10,000 orders. But that's not, you would think that's going to be retail, but it often is. But at the moment, it seems to be dominated by some institutional TWAP bots. You can tell because of the lack of contour in this line, right? It's just a really smooth diagonal slope. This is where it gets a little more retail-y involved here down here. But this was a TWAP bot running, and it looked about like, when I looked at it last, it was about a $25 million outflow in a period of about 6 hours. Let's see if that extended, what that is extended to. We're looking at that $1,000 to $10,000 order class, and we can see that they dipped out about, so it's, not a whole lot more at this point. Oh, there we go. So some bigger dips here now, 31 million. We were up at what, like 3 million? Yeah, so about 33 million. So they've just kind of continued on that trend, and they got a little extra momentum here from retail getting panicky about this recent dump that we've just seen. So to me, that was not an area to panic or get scared because, again, we have anticipated this volatility, and we're coming up at such a pivotal point that I have waited. I have been running a long and short straddle, if you will, to kind of hedge and lock in the P&L until we have some clarity. And I waited. There were a couple times I could have taken a decent profit on the long, and I did take a partial profit, but I started rebuilding it again today when we moved into that dip because we have our quarterly close, monthly and quarterly close, and that's typically a good place to get some to get some insight. So I want to head over to the candle chart here and show you a couple things. I talked about some potential traps here that I want you to avoid, and one is this pending death cross, which, as you can see, it's imminent. After we close this weekly candle, this will be formed. And death crosses are, obviously a bearish, have kind of a bearish signature, but they're not all created equally. And they don't always mean that there's going to be a massive dump. In fact, if we look through history, we've seen this particular death cross, this very same one between the 50 and 100 week moving averages, form once in each cycle. And each time, it has done something different than some of the other death crosses. So let's take a look through history and we can see them. I've circled them all here. And you can see that historically, this has not necessarily led to a massive breakdown, right? There's been a bit of a grind down, but it actually led to a consolidation. And this is the first time that we introduced the 200-week moving average into the chart back in 2015, right? It took that long to form. There weren't 200 weeks prior to that. So since the introduction and the development, I should say, of the 200-week moving average, we've seen a couple of interactions with it that make this a very important level to us. This is considered by most to be a macro support level. It has, however, been lost before, and it's currently lost right now. In terms of being a support level, but it is considered to be an area of interest for those who are accumulating long term because of the fact that price has a history of rebounding above it. So if we go back to 2018, right? This was the 2017 top in December. Things broke down. We had a consolidation right above that 200-week moving average, and it happened for an extended period of time, right? So November 2018 through March of 2019. So 5 months until it actually, 5 or 6 months actually, until it actually resolved into a bull market recovery. Okay, so the actual bottom happened in February. That was a few months, 4 months, and then once we reclaimed the 21-week moving average, it was off to the races, building that bull market. And if we now fast forward to the prior cycle back in 2022, this was the 2022 bear market breakdown, similar set of circumstances. This one absolutely ripped through the 200-week moving average, and we did see a little consolidation, then a breakdown. This was the flash crash from the FTX crash, and I've said for a long time, was this an anomaly from this black swan? Right? If we didn't have the FTX crash, would we have had this consolidation and built out from here? And so was this just kind of an anomaly based on that FTX event and the fear that it put in the market? So these conditions are very similar, with the exception of the fact that we don't yet have, and hope we don't get, that black swan like we saw back in November of 2022. Of course, it's worth noting that there's always a black swan circling the pond, and in the current environment, it could pick your catalyst. It could be any number of things. Rarely is it the one that we think. So we'll just have to sit back and wait and see how that develops. But point being, this death cross does not scare me. In fact, based on the history, it kind of excites me in the fact that it's an indication that we are nearing the bottom. At least in terms of what we've seen historically. I guess the term near the bottom is relative. Are we talking near the bottom in terms of time, or near the bottom in terms of price range? Well, both. This box is just a replica of this box. Doesn't mean it has to be the same at all. Now, the patterns have developed very, very similarly since this. So as much as we say price does not have to mimic what it did back then, so far it's following close enough, not mirroring it identically, but it's following close enough to pay very close attention to this until it deviates further. So, and this would be one of those deviations, right? Will we get another leg down from here, or is this the last leg down in development at this point? So that's something I'm watching here in terms of the moving averages. In terms of the RSI, we have heard a lot of talk about a bullish divergence here on the weekly RSI. And if you followed this stream for any length of time, you want to know, you should know that this is a very important level to me. This 41 range, 41.5 is where I have it tracked on the chart here. And recovering it, we did have a fake out above it, didn't fake me out. And if you were here, you know why. And if you don't know why, you can go back and watch any of those streams around that time, and I'll explain it to you. But let me say this. Let me just expand this here for a moment. We are at this point still making, we did make one higher low here, but one does not make a trend. So because of the fact that price is still trending downwards, there's still an opportunity for this to create a lower low. And so let me just draw this in place. So this so-called bullish divergence, this was more of a divergence when it was here and when it was here. But and to be honest, when this weekly candle opened, this tiny little tag right here. So this is the current week. This was more flat at the open yesterday when things were pumping a little bit. It ticked up a little bit. Now it's ticked down. This doesn't matter until we get to the weekly close and it prints, right? Is it going to print up above this level? Is it going to print down below this level and create a lower low? And in either instance, what is the trajectory from there? Do we trend up? Do we trend down? Do we trend flat? So watching this very, very closely. But this, if price breaks this, that obviously invalidates the bullish divergence that everybody has been talking about on social media. So be mindful of that. Go back to the full chart here. So again, we have a bit of a roadmap here. Now, in terms of what comes next and what I'm watching most closely, obviously, I always stay in tune to the order book liquidity and order flow, and I want to see purple whales to. I told you I have a straddle between a long and a short to determine which side I'm going to build further. That's going to have to do with obviously liquidity and momentum and some key price levels here. So how I gauge that, in addition just to the broader technical analysis, is let me go to obviously we've lost the trend, and obviously we have lost the 200-week moving average, but this is still an intra-week candle, so this hasn't closed yet. It depends on where we close the week. We have a monthly and quarterly close, daily, monthly, and quarterly close tonight, but this candle is a weekly. So what matters is not where it sits now, but where it closes. Will it close above the 200-week moving average, which sits right now at about 62.5, or will it still show signs of weakness? And if we go back in history, we can see that price did flirt above and below that line for quite some time until it broke down further. So there's that. On another time frame, if we step out to the monthly, we can see that we are flirting with the 50-month moving average. It is rare that we get there, but not unique. Back in 2022, same thing happened. We lost it and fell to the trend line. We don't have that trend line to fall to now because it's gone. So what will serve as the next support level if we don't reclaim this by tonight's close? So again, this is at the very moment, intra-month. It's not where we sit right now that matters the most. It's where we close. Can we close back above that 50-month moving average, which currently sits at around 59,100? I'll even give you some precision on that. It's sitting right now, at least on Bitstamp, it's at 59,255. So will price close above that or below that? That's something to pay attention to 100%. Okay. Now I want to head over to another chart that I have built up here. And we obviously see the same things. I don't think I actually have all these moving averages on. Let's turn them back on so we can see them. And I want to show you some other indicators that we're going to be watching for. So as you can see, trend precognition. We're on a short signal on the actually from the beginning of the year. It's just been, we have it, and I like showing this across time frames to give you some context and perspective here. A yearly signal, which is extremely rare, takes a lot of history to get to a yearly signal. Yearly signal basically indicates that we are not likely to see a new all-time high before the end of this year. If we extrapolate that down into or drill into shorter time frames, the 6-month time frame, same situation. That candle ends in 8 hours. So I guess we're actually going to see not just a 3-month, but also a 6-month signal here tonight. So we'll be watching that very, very closely. On the 3-month time frame, we're still downtrending from the year, and it's a matter of what is this news? Will we get potentially a new trend precognition signal tonight on either the monthly, which is currently playing out a short signal, the 6-month, the monthly, the 3-month, or the 6-month time frame. These signals, especially when they appear right at the candle open, are when they are strongest. certainly one could develop throughout the candle, but it's the ones that appear at the beginning, at the open, within, on these kind of time frames. I would say within the first few minutes to hour of the time frame, um, would be very solid in my opinion. So we just have to see what happens. We'll be watching very, very closely to see if we get new signals across any time frame tonight. We'll get a daily, a monthly, a quarterly, and a 6-month opportunity potential signals. Nothing says they has to form, but it would sure be nice if they did, if we got that kind of clarity. And as you can see down here on the A1 slope line, the orange line here, we're still trending down on the monthly, still actually trending up slightly on the quarterly, and on the 6-month, we're still trending way down. So again, we're going to watch this at tonight's close open and see if we can get some clarity from that. And then there is one more layer that gets a lot of attention from me, and that is Timescape levels. And so if you're new or have not ever heard of Timescape levels, this is an indicator that we developed in what year are we in? We developed this last year, 2025, actually. And it has proven to be really, really solid, really, really helpful. These show up at quarterly opens. And we actually get each quarter, we get a pair of them. We get one on the first of the month, and we get one on the first weekly open of the month. And there's a dynamic between those two that's pretty interesting. Typically, if price goes up from the monthly open, it most frequently rejects from the first weekly open of that quarter, and vice versa. And so certainly there are fake outs from time to time, but those are the things that we'll watch for clarity of how this trend is likely to develop. So we'll get the first benchmark tonight at the close. Is price going to move up from that trend, which essentially becomes a brand new permanent RS flip line on the trend? Will it serve as resistance or support? Meaning, is price going to go down from the open or up from the open? And then we will be able to validate that after another really 2 weeks technically. But the first week, or excuse me, on Monday, we'll get another line on the chart, and we'll see how price behaves between that line, dynamically between that line and the one that opens tonight. So we can see these across all time frames, which is the great thing. One of the great things about this indicator, it never repaints. It's going to be there the instant the candle opens. So it will be there throughout the end of time. And so we're going to get a sense of how things are developing based on how price reacts specifically to these two new levels that are coming in. Again, one will come in tonight at the new monthly open, and another one will come in on Monday at the first weekly open of the quarter. And that's going to let us know if we're kind of trending in what direction we're likely to trend in. And does that mean that we are going to drill down further, deeper into a correction, or could this potentially be our last consolidation range before we climb out? That, in a nutshell, is what I'm looking at. It may sound simple, and that's because it is. So something to pay attention to right here, however, let me just check on something. Did we make a lower low today? Our lower low was at $58,035, and so far we're at $58,076. So far, no lower low. Seeing one, listen, no surprise if price breaks down from here, because we've all anticipated that. Here's another indicator we can look at. So this was anticipated, the breakdown, and many of us expect price to go lower. Sure, there's some people who say the bottom is in. There's a cohort, myself included, that believes we'll be somewhere, will establish a bottom somewhere here in the mid 40s range. And there's a cohort that thinks we're going much lower into the 30s or potentially even the 20s. And so I would say stick with your plan, whatever it is, and we will get some clarity out of these timescape levels, if nothing else, right? If we start seeing price rebound from timescapes, if we start seeing price move up, then we have a pretty good indication that this is where we want to be accumulating, because price is likely to appreciate out of this range. If we get a timescape level and price goes down, or we get a quarterly signal that says price goes down, then we're looking for the next range, for the next range below us to likely be a better accumulation range. Oh, who have we here? Yali, hello. Nice to have you with me. Appreciate it. And, guys, as always, live chat is open. So if you have any questions, now's your time to fire them off, because I'm about to wrap this thing up. We will get another look here at the order book and see if anything like really monumental has changed, other than, look at this. We have a new block of ask liquidity coming in at that 60,100 level. This, in my opinion, is not here to get filled. This is here to suppress price. So we'll have to see how price reacts to this. It's so far $14 million. That is substantial. Oh, one thing I failed to mention here today. One of the things giving this a tailwind, at least the downside pressure, one of the things giving it a tailwind is the fact that all EU customers are being forced off of Binance today. So, and I know that there's some other exchanges that are also caught up in that MiCA issue over USDT. So that also explains some of the velocity of today's breakdown. But this is not going to be a sustainable thing, right? It's going to happen and then it's going to be done. So those traders are doing one of two things, or one of three things. They're either simply moving into another exchange, or they might be moving into cold storage, or they might be going, you know what, here's my sign, I'm selling, I'm taking profits, or maybe even considering rotating into something else until the market stabilizes. So that explains some of the volatility we're seeing here in terms of the near term. One Armed Bandit says, get it, send it, pump it, hold it, just don't miss it, friends. Learn fast and stack faster. Yeah, well, sure. Just I'd say be smart. Don't buy into the hype, man. Okay. So wait for the signals. You've waited this far. And I alluded to this a little bit here at the beginning of the stream, where I have this straddle between a long and a short. And I could have taken profit on either of them, quite frankly, had many occasions to do so. But I feel like the macro is still short, so I'm good with leaving that trade open. And the long, it's a hedge against the short, but I could have closed it, and I contemplated closing it yesterday, but I told myself, stay disciplined, resist the urge to take profit on it right now. And I may go back and regret that, but for now, I'm okay with it, because I do think that at the very least, we're going to see some volatility that takes us up from where we are right now. I don't believe in up only, and I don't believe in down only. So there will be that intra-range volatility, just like we had here. So if I get signals that say that we're going down from here, then yes, I will close that long. It's still ultimately a profitable trade, because I've taken profit on most of it and hedged it with short. So not concerned about that in the least bit. Alex, good to have you. Alex, do I think USDT will be going down because MiCA? Short term, it's an issue, right? I'm not really well versed on the dynamics of why USDT is the issue for Micah and say USDC is not. If anybody has insight to that, by all means, chime in. But I mean, I don't personally forex that trade, if you will. So I'm not concerned about it. I'm also mostly I'm also not even trading USDT. I'm in USDC because of the fact that I earn yield on it. But let's check something out real quick. So certainly some volatility in that play. But I do think it will level out after we get past this phase. Yeah. So Alex saying Circle, which is USDC, is MiCA compliant. Why USDT wouldn't do that? It's like it's not like it's news that MiCA exists, and it's not like it's news that it's a problem. They've known this. It's why other coins are compliant, and why USDT isn't. I don't know. Couldn't answer that for you. So this volatility out of a stable coin makes it, in my opinion, not so stable. And in terms of monitoring stablecoin dominance, I know a lot of people monitor USDT's dominance because it is the dominant stable coin, or at least it has been until now. But I like to watch a metric called stable.c.d, stablecoin dominance, which includes a basket of stablecoins. And you can see what's happening right now as we have this volatility that we're experiencing. Stablecoin dominance is double topping right now. Is it potentially going to break out? We'll have to wait and see, as everything else is breaking down at the moment. These are often short-term price reactions to the volatility. Bitcoin dominance has not yet made a lower low. Total 3, on the other hand, has made a lower low. This is your altcoins. Sorry about your alt season, guys. And now ETH is trying to make a stand. ETH has been the underperformer of the crypto market, at least on the Dino coins, for a long time. And it's trying to rebound, but you see it running into resistance right here at the trend line as well. There are lots of things to look at and lots of things to benchmark right now. And I think the thing that's going to give us the most clarity, in my opinion, is going to be this combination of trend precognition signals and timescape levels that should give us some clarity in this chaos. As you can see, price rebounding off of the lows at the moment. And, you know, I see all these doom posts. It's less than a 3% move. A 3% move in crypto is not a nuke. So don't overreact. You've made it this far. Stay patient. Let's see what these signals tell us. Let's see if we get new trend precognition signals on these higher time frames, especially. And let's see how the dynamic relationship between price and the new timescape levels that are coming in. We'll have one tonight at the open and another one on Monday. Going to leave it right there, guys. Lots to chew on. If you want to discuss this stuff further today, I invite you to join me inside the Material Indicators Telegram community. It's free. Links to it are in the description down below. If you're not there, you're missing out on just great conversations and discussions about what's happening in the market on the regular, man. Okay? Join us there. Thanks again for joining me. I appreciate each and every one of you. If you haven't done so yet, if any of this resonated with you or you found it valuable, do me the favor of smashing a like, dropping a comment, and sharing it with somebody in the crypto community so you can help me grow the channel. Thanks again, guys. We will talk again soon. Make it a great day.